Hi there. Tell me, is Amazon stock a buy at the current level as the stock price has declined from its highest peak by over 20%? Is it a buy right now, a great buy? Well, the answer we'll find in this video. If you don't know it. If you know it, then you can watch other videos. First, you look at the market cap. Now it's close to $2 trillion. So how do you know if the stock price is undervalued or fairly valued to have a nice return from this company, from this business, AMZN.com? Well, you look at the revenue, right? See their segments and what they do. Here you see revenue for the last 12 months, over $600 billion. Most of the revenue comes from North America, International, and AWS, their cloud business. But guess what? I have a question for you. Where does most of their profits come from? North America, International, or AWS? Let me know in the comments. So let's continue. Then you see their operating income for the last 12 months. Trailing 12 months. Over $68 billion. And this is quite a lot. Quite a lot. If you can rely on this number, then yes, the market cap is fairly valued. But I'll tell you a secret. This is not the real number. The real earnings and real free cash flow. Because you also look at the net income, you see just a small difference because they also have to pay taxes, right? Close to 60 billion net income. Still, at this level, the market cap can be about 1.8 trillion, around 1.9 trillion. So fairly valued based on their net income. And if you value this company only on their final earnings, yes, right now AMZN.com is fairly valued. But there is a catch. And if you don't understand it, you buy the wrong time and have a decline like this. Or you have a low return because Amazon for sure will grow more in the next 5 to 10 years from this level. But it depends on your assumptions and your time horizon. If you plan to hold this company over the next 5 to 10 years, then the current price, yes, you can buy it and have a return. Maybe 10%, 5%, it depends on their future growth rate. But if you plan to make a huge profit like this in just a short period of time, then you have to keep watching. Because what I'll tell you is quite important. You look at the most important metric, free cash flow. And if you read Jeff Bezos' letters over the years, he always spoke about free cash flow, not earnings. Because earnings, your final earnings, are misleading. But he spoke about free cash flow. And if you look at their free cash flow, it's about $38 billion for the last 12 months. And if you do the valuation based on this number, then yes, the stock price is overvalued. Now, you might say that their free cash flow doesn't matter because they keep investing in AWS, their cloud business, right? Data centers, AI, and so on. And for the moment, they will have low free cash flow, but in the long term, their free cash flow and final earnings will grow higher and higher. And that's right. But you have to be careful because they have some expenses, annual expenses, capital expenditures. Those will always be there. And if you do the math, you look at their operating cash flow here. You see here operating free cash flow, 115 billion for 2024. And if you subtract their capex, yes, you might have 38 billion in free cash flow, but these are not the real numbers. That's why you have to watch closely. And let me explain what I mean by this. If you look at the segments here, North America, see the revenue on the left side and the right side operating income. Operating margins close to 8 to 10%, less than 10%, right? 115 billion net sales, operating income 9.2 billion. Here you can see better for the last 12 months. 387 billion, 25 billion. So less than 10%. International, 43 billion, 1.3 billion. So this is even less than 5% operating margins. And then AWS, here you better look here for the last 12 months, 107 billion, operating income 49 billion. So their operating margins close to 40%. So most of their profits, look here. AWS 49 billion, International 3 billion, close to 4 billion, and North America 25 billion. So most of their profits come from AWS. You have the numbers in front of you. So to predict the future of this company, you have to predict if AWS and the other two segments will grow more in the future. And how can you do that? Well, if you are a developer, if you have some background in computer science, you will know more things about AWS. It's well known, they have a huge market share, and developers are eager to work with Amazon. Now here you can see better in this table the revenue based on groups. Online stores, physical stores, third-party sellers, services, advertising, subscription services, AWS. Now, an important thing, and of course geographically. So, an important thing about this company is, if you look here, total revenue, right? Pay close attention to this. You have product sales, $272 billion, and net service sales, $365 billion. Now, if you exclude their service sales, and you look at their cost of sales, plus fulfillment, you can see that they are higher than product sales. Of course, this is not a precise metric to look at, but a huge cost of the revenue comes from product sales, because you have cost of sales, you have to buy the products and sell on our platform, and fulfillment services. And this cost will grow more in the future. So when you value this company, don't think only on their Amazon platform, how many products they sell and their margins. Think also the services they offer. Because in the future, most of their growth will come from their services. And you have to be very careful here. Because you see better in this image, this table. North American net sales, operating income, operating expenses. They are close to the revenue. They barely make 24 billion in profits. And that's still good. International is like that over the last 2 years. Losses and a profit of about 3.7 billion. And net sales, you look here, over 142 billion. Of course, here they also have competition, especially Chinese companies. PDD Holdings, Shein, Alibaba, and other platforms. But AWS, here they are the leaders. They have close to 40% operating margins. Now, we can agree that AWS is the key for the future growth rate. Of course, also North America can increase more in the future, but be aware that for the moment they are facing some challenges for North America. Because, let me show you here, trade war between China and the US. And as Amazon buy most of their products from China, they have suppliers there. And also, you look here, third-party sellers, services, they also buy products from China. They will have higher tariffs. And if those party sellers go out of business because they can no longer make a profit, Amazon will get affected. Not only their online stores and physical stores, but also third-party seller services. They will be affected. And if you look, you add all the revenue, it represents more than half of their total revenue. So, tariffs is like a big hit for Amazon. Because they will lose profits not only from North America, but also from their services, where their margins are higher, quite high. And you have to be very careful here, because as the market cap is close to $2 trillion, and their final earnings aren't 68 billion, better said 60 billion, but less. Right now, the stock price is expensive, overvalued in my view. But as I said, if you buy this company, hold this company for the next 5-10 years, there is no problem. You still can make a profit, break even. But if you plan to have a huge jump like this, in just 2 years, over 200%, then now is not the right time to buy Amazon. Now, if you want to know what price I will pay for this stock, Amazon stock, you can join my membership. To do that, go to my profile, press join, and scroll down and press join. And if you want more great investment ideas that are undervalued right now, you can join my Titan Investor, where you have access to my portfolio, see what I buy, what I sell, and I also have an investing course for beginners, from zero to expert, that will teach you how to take advantage of companies like Amazon and buy them at the right price. So to do that, please do it from an Android or laptop to avoid extra fees from Apple. And that's it for this video, and if you have other questions, please let me know in the comments.